Oh, good morning. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the European markets for the Tuesday, the 10th of November 2015. Okay, this is a morning market wrap-up as to where we stand. Now, be sure to visit CFDs.com, the leading spread betting CFD brokerage. You can visit them at www.cfds.com to learn more about their products and services. Alternatively, visit the educational site www.cfds.education, where I post my charts and analysis daily. Okay, in terms of the actual markets themselves, the way in which we stand at present in terms of global market data, obviously the US markets were down at a negative overnight. The Asian markets followed suit, although the Nikkei certainly bucked the trend and was up by 28 points towards the close. Then the Shanghai was flat, and obviously the Hang Seng was down by minus 1.4%. Now, a lot of the weakness was based on the fact that we had the weaker Chinese inflation data, although the alternative argument to that is, given the fact that we have weaker inflation means more stimulus. So it just certainly depends on which angle you want to look at the markets. Okay, we still have yet to hit the 200 MA. Okay, on the Shanghai, we have closed the gap on the downside, so that certainly remains a key. We have broken out this diagonal trend line as well, so certainly a thrust high up to 200 MA certainly is possible. We're at the fib 75% resistance on the Shanghai index at present. Okay, now, in terms of the Nikkei as well, it was a flat day on the Shanghai. Nikkei certainly looks as if it wants to thrust higher. We still have this unfilled gap at 20,000, certainly yet to close, so all eyes on that gap above. Okay, now, in terms of the actual news flow this morning, let's just have a look. Okay, in terms of the news flow at present, now we look at the positive side effects. First of all, we look at the risk-on scenario. So we had stronger Vodafone earnings, certainly bullish. A weaker Chinese inflation means more stimulus, more QE. More interest rate cuts, therefore they have the room to maneuver, and therefore it may well be interpreted as being bullish. Okay, so we have China meets its 7% growth target, reiterated by policymakers. French data, industrial production stronger. Premier Foods, Prudential earnings stronger. IMF unemployment, it's basically forecast stronger employment going forward, and we've certainly had stimulus talk and fiscal monetary policy talk in terms of lower financing costs, etc., and infrastructure, so on and so forth from China. So basically dovish rhetoric. EU growth strengthening by Likuden, etc. So certainly some positive comments with regards to the economy. Okay. Now, in terms of the bearish side effects, there have been plenty. We've had a lawsuit that the ECB faces therefore basically three lawsuits that it faces with regards to QE. So anti-QE talks, so therefore hawkish rhetoric. Mr. Weidmann certainly hawkish, therefore again hawkish rhetoric, but still it's yet to cause the euro to rally. So a lot of that is just noise, and it's been ignored thus far. So it all depends on the actual reaction on the euro USD, and the euro USD certainly is bearish at present at 1.0730, given the fact that the Fed obviously and the ECB certainly remain divergent in terms of monetary policy. We've had Moody's warns of global stock shock waves from China, etc. Fred Rosengren yesterday was hawkish. US markets obviously were weak. Portugal, Spain, Greece, they're the three main concerns at present. Okay, Kiwi overnight rhetoric was basically dovish rhetoric, and obviously caused it to fall. BRC sales, basically Black Friday sales expected to hurt. So therefore, retail sales in the UK certainly negative and gloomy. Hornby, a second profit warning. Eon certainly posting a potential fine. I think it's in excess of 7 million, so therefore very bearish. Okay, in terms of Wolseley, profits were down as well. Aviva and oil, obviously with Mr. Badri's comments, certainly put pressure on the oil market this morning, and that's why we're seeing the FTSE 100 down. Now, initially I was actually short the FTSE, and I actually closed my short position because of stronger Vodafone earnings. And given the fact that Shanghai was flat and stronger Vodafone earnings, I expected the FTSE to continue its rally, and that obviously has not been the case because stronger dollar, weaker US markets certainly, and obviously weaker commodities certainly has weighed on the FTSE. Now, I didn't actually expect that, and my analysis certainly has been wrong on the FTSE this morning. I still remain long on the FTSE. My stop loss is at 6249, and I'm still looking for a thrust higher. One of the main reasons why I'm looking for a thrust higher in the FTSE is because the commodities are into support. As you can see here, the Greenhaven commodity index certainly is into support. So certainly looking for a thrust higher here. Okay. In terms of the actual Aussie itself, you can see Aussie itself certainly is remaining bullish. no lower lows, putting in a higher low. Even though we had to go dovish rhetoric on the Kiwi overnight, still it's managed to thrust higher. So very impressive movements in the Aussie and the Kiwi, and therefore signaling a potential move higher in commodities. Okay, bear that in mind. Now, in terms of oil itself, you are obviously holding that potential double bottom on oil around the 43.80 level, and therefore you are looking for a potential thrust higher. On the daily chart, you are into support on the price of oil, and as you can see here, okay, gold itself certainly has come off the lows and certainly is pushing higher, and therefore that should help commodities. Now, copper is probably the only indice, or basically instruments thus far that's certainly weak in terms of post weaker inflation, but that should certainly change given the fact that we have the dollar obviously into resistance now. If I bring up the chart of the dollar itself, there we go. Okay, so you have an unfilled gap on the dollar, on the actual dollar itself. So we have had just come out. We have had the weaker NFIB optimism come out negative, the economic data, and then we do have inflation data out the US. US import prices, export prices certainly will be telling. We have Red Book data, Red Book index as well, wholesale inventories. So it should be interesting as to which way the US markets want to go. But again, my analysis thus far, based on the commodities alone, is telling me that you do have a potential bottom in commodities and a top in the dollar, and therefore that should help the FTSE 100 move higher. Okay. Now, in terms of the German DAX, let's look at the actual markets now. German DAX in the 60 minutes is certainly into support around this region here at 10,730, and obviously support below at 10,720. You do have the support at 10,690, but it's very hard to see or envisage that occurring. Again, we had talk about a rate cut in December, and that should certainly help the actual DAX itself. Also, given the fact that the euro is still languishing at the lows at 1.0730, and no real thrust higher there, even with Mr. Weidmann comments and obviously talk about a lawsuit. Again, no real movement in the euro itself, and therefore it should help equities altogether. Now, the DAX itself is obviously holding its double bottom support here, and we do have this falling, expanding wedge pattern, and we are looking at a potential break and a move higher from here. That's my theory or expectation thus far. The daily chart itself certainly is a negative candle. As you can see here, we flushed, but we do have horizontal support coming into play. Or obviously you have the unfilled gap below, and we shall see exactly how the German DAX responds. But given the fact that the euro is certainly languishing, and even though hawkish rhetoric failed to send the euro higher, then you are looking at a bullish reaction. Now, MDAX itself certainly has flushed and sold off quite substantially. The MDAX itself, you had this horizontal support and that failed to hold. The next support obviously is seen down here and down here. Okay, and you do have a horizontal support here too, okay, on the MDAX. Now, the Tech All Share Index, again, you are looking at previous resistance equals support on the daily chart. The 60-minute chart, you've obviously closed this gap now, and therefore gap fill support on the Tech All Share, and therefore you are looking at potential thrust higher in the European markets from here at this juncture. You have horizontal support below. We have broken out this key upper sloping trend line though, so therefore the one needs to remain vigilant of that in terms of the actual movements there. Okay, and certainly is certainly is a week from that perspective. Okay, but all eyes on the commodities from my perspective, and given the fact that we've had Premier, especially with regards to the FTSE, also French data came out stronger as well. Okay, now let's look at the actual French CAC itself. Okay, 10 daily chart first of all on the French CAC, certainly indicating weakness thus far. You do have horizontal support on the French CAC here at 4830, 4837. No other level of support that I can see at present on the French CAC. If I bring up the 10-minute chart, you certainly seem to be making lower lows and lower highs. The 60-minute chart itself certainly is in no man's land at present, although we do have this support zone coming into play. So that's something that we're certainly going to observe and watch out for in terms of the French CAC itself. Now, Euro stocks, let's bring up the chart of the Euro stocks. Now, the daily chart, first of all, the bear flag certainly has played out thus far, although more than expected to a large extent. The 60-minute chart certainly has flushed and now is coming into potential support here on the Euro stocks. Also, remember, given the fact that we have talk of QE in December and Draghi's and obviously monetary policy divergence and the euro obviously remaining so low, you'll certainly see a bid in Euro stocks very quickly once the bulls come back into play. because of the weaker euro. Okay, bear that in mind. Now, the last index that we're going to look out for this morning, or observe this morning, is going to be the FTSE 100. Now, I'll bring up the chart of the daily chart on the FTSE itself, and you can see that we are coming into support now on the daily chart itself. On the 60-minute chart, you've obviously completed this H&S formation now at 6260, and that's exactly where we stand at present. You can see the market has flushed down as low as 6255. Okay, so certainly H&S formation complete. Hats off to those that kept the market, or kept the FTSE for so long, especially given the fact that we had quite a substantial spike here in the morning up to 6330 based on Vodafone, and that obviously didn't last. As you can see here, the market sold off ever since, and quite substantially at that as well. Okay, so very, very impressive, but from a fundamental basis it was very hard to actually maintain the FTSE long, especially given the fact that you had a bullish engulfing candle, you were consolidating, and then I expected a potential thrust and a move higher. That obviously hasn't materialized because the market certainly seems to be focusing on other factors at this juncture. Okay, so again, all eyes on the FTSE. I am not expecting a short squeeze in the FTSE given the fact that we have stronger Vodafone earnings, stronger Premier Food earnings, stronger Prudential earnings. So a barrage of stronger earnings this morning, and also given the fact that we've got the Aussie and the Kiwi remaining strong, commodities obviously into support. So all the variables align for a potential move higher on the FTSE 100. Okay, now again, in terms of the US data out shortly, you have import price, export price, all inflation related, and that should be interesting as to what the reaction on the actual dollar index will be. My interpretation is that we are going to start moves to move higher. Now, in terms of the actual S&P 500, yesterday we did put in a pivot low at 2070. We're currently 2072 on the S&P now, so therefore I am expecting this horizontal support at 2072 to hold. And you did put in a double bottom or a triple bottom, and I am expecting a higher low here, so don't be surprised to see 2083 again as of yesterday's intraday bounce high. Now we are testing the we certainly held the neckline at 2083 on the S&P 500, and the target on this is 2048. Whether or not that completes is another equation, given the fact that the Nikkei was obviously bullish overnight, and obviously the stronger jobs report is certainly whether or not it's being interpreted as hawkish and hurting commodities, or whether that's being interpreted as stronger fundamentals and therefore you buy the market. So again, several potential theories with regards to the market at present. Okay, but again, we need to remain vigilant and open-minded to this H&S pattern on the actual S&P 500 itself. Now, that should be a wrap, folks. Bear in mind the FTSE 250 again as well. This is in potential support. On the 60-minute chart, you can see here you have horizontal support. So therefore, again, supports the theory for a move higher on the FTSE itself. We failed to hold the 200 MA, which is quite strange. But again, you have to respect price action, and that's the way in which this market wants to move. Okay, again, my theory is that commodities, certainly as you can see here, the Greenhaven Continuous Commodity Index, which is very similar to the CRBQ, is obviously into horizontal support, potential double bottom, and the dollar is obviously into resistance. Their FTSE has completed its H&S formation at 6260, and therefore I am looking for a short squeeze at this juncture. Okay, safe trading for the remainder of the day. Be sure to visit cfds.com for your trading needs. Goodbye now.